Hello and welcome to SSA Masters. It's our second lecture on the paper FA2, and in this lecture first of all we will talk about assets and liabilities. We have two type of assets and two type of liabilities. First of all we have current assets, then we have non-current assets. Similarly we have current liabilities, and then we have non-current liabilities. Current assets are those assets which we can easily convert into cash within 12 months. And current liabilities are those liabilities which we are required to pay within 12 months. The examples of current assets are inventory, account receivable or cash, and examples of current liabilities are bank overdraft, accounts payable, or any other short-term loan. Now if I talk about non-current assets, then these are those assets which we cannot easily convert into cash. Okay, or we can say that it may require 12 plus months to convert them into cash, such as property, plant and equipment, etc. Similarly, non-current liabilities are such liabilities which are required to be paid later than 1 year. Now here we have one important point. We split this non-current liabilities into two parts. The one is current liability and the other one is non-current liability. Let's say for example we have taken out a loan of 8 years and we are required to pay some installment each year. Okay, then the installment which is due within 12 months will be categorized as current liabilities, but the rest of the amount will be categorized as non-current liability. Now next we have capital expenditure and revenue expenditure. If I talk about capital expenditure, then it includes all the expenses which we are required to incur to bring the asset into its intended use will be the part of capital expenditure. So that means all the capital expenditure will become the part of our asset, and ultimately our total assets will be increased. And one more point, if we are incurring any expense at any subsequent stage and that expense is enhancing the performance of our asset, then such a expense will also be categorized as capital expenditure. But remember, it does not include repair and maintenance. Or any other operating expenses. And the revenue expenditures will be treated as expense in profit and loss account. But the capital expenditures will become the part of our statement of financial position or our balance sheet. Okay, now it's time to solve some questions. On your screen we have question number 1. Which one of the following assets may be classified as a non-current asset in the accounts of business? A tax refund due next year, because it's a refund from tax department, so we will classify it as account receivable. A motor vehicle held for resale, because our purpose is to resell the asset, so we will categorize it as inventory for the business. A computer used in the office, yes, it's our asset. A hire purchase creditor, let's say we are purchasing something on installment, So that means these installments will be our liability, which we are required to pay. Then we have question number 2. Roberta's trial balance include the following items, and we are required to calculate total current liabilities for the year ended 2007. So it's our inventory, it will be classified as asset. Then we have trade receivable, again it's our asset, and specifically both of them are our current assets. Then we have trade payables, yes it's our current liability. Bank overdraft, it's also our current liability. Then we have loan due for repayment in 2009, for example 2 years later than this date. That means we will categorize it as non-current liability, as we are required to pay it in more than 12 months. Okay, so it means only these two amounts will be treated as current liabilities. So the correct answer is option A. Next we have question number 3. Which of the following statements about capital expenditure is correct? It is expenditure on non-current assets including repair and maintenance. No, repair and maintenance is not included. It is expenditure on expensive assets. No, it's not true. It is expenditure relating to the issue of share capital. It's also not true. It is expenditure relating to the acquisition or improvement of the non-current assets. Yes, it's true, and we have already talked about it earlier. Which two of the following costs on the invoice for new company car would be classified as revenue expenditure instead of capital expenditure? Okay, road tax, yes, it will be categorized as revenue expenditure as it is operating expense. Number plate, no number plate will be treated as capital expenditure. For example, we are required to pay for number plate when we have purchased the asset. Okay, maintenance contract, no, again it is revenue expense. And finally we have delivery cost. The delivery cost and all the installment expenses is also treated as capital expenditure. So that means the revenue expenditures are only road tax and maintenance contract. Now before doing the next question, let's see how we should categorize sale taxes. Okay, the sale taxes should be categorized as revenue expenditure. But in case if the sale taxes are irrecoverable from the tax department, then in that case only it will be capitalized. But normally we will always categorize the sale taxes as revenue expenditure. Okay, now let's do the next question. Here on your screen we have question number 5. Ian is entering an invoice in the accounts. The invoice shows the following cost and we are required to calculate capital expenditure. First of all, we have manufacturing equipment. Yes, it will be categorized as capital expenditure. Then we have delivery charges. Yes, delivery and installation charges are also part of capital expenditure. Maintenance charges will not be categorized as capital expenditure. Sale taxes will be categorized as revenue expense, and that was the amount of our total invoice. So that means from this invoice only this amount will be categorized as capital expenditure. Okay, and that will be our option B. Next we have question number 6. Which of the cost should be treated as revenue expenditure? Delivery and installation charges, as I told you earlier, will be categorized as capital expenses, but the maintenance charges will be categorized as revenue expenditure. Next we have question number 7. Which of the following items should be included in current assets? First of all, assets which are not intended to be converted into cash. No, it's not the definition of assets. Assets which will be converted into cash in the long term. These are the assets which are known as non-current assets. And finally, assets which will be converted into cash in the near future. For example, within 12 months, and yes, these are the assets which will be categorized as current assets for the company. Okay, so the option C is the correct answer for this question. Next we have question number 8. In the year ended 06, Nandin recorded some revenue expenditure as capital expenditure. That means she made a mistake. What is the effect on her profit as a result of this mistake and on her net assets? First of all, let's say if she had correctly included it as revenue expenditure, then in that case she had to include it into her profit and loss account as an expense. Okay, but right now what she did, she categorized that revenue expense as capital expense. That means she had included it into her balance sheet instead of profit and loss account as a asset of the company. In other words, we can say that her profits were increased because she had not recorded that expense. That's why her profit was increased. Now just please recall the effect of profit on opening capital. For example, we had opening capital plus profit minus drawings, additional capital plus additional capital, and finally we had closing capital, right? So that means this profit is increasing our net assets, and we know that net assets are equal to our capital of the company. Okay, so our profits are overstated and our net assets are overstated as a result of this mistake. Then we have question number 9. Which of the following statements describes current assets? Assets which are currently located on the business premises. No, it's not the definition of current assets. Assets which are used to conduct the organization's current business. Assets which are expected to be converted into cash in short term. Yes, it's the definition of current assets. And finally, assets which are not expected to be converted into cash in short term. These are known as non-current assets. Next we have question number 10. How should each of these balances should be classified? Insurance. Insurance is an expense for the business. Trade payable. Trade payables are short-term loan. That's why we will categorize it as current liability for the company. And trade receivables should be categorized as current assets of the business. Next we have question number 11. Which two of the following statements relating to the statement of profit or loss are false? This statement of profit or loss is also known as income statement, and income statement deals with profits and expenses. On the other hand, if we talk about balance sheet or statement of financial position, then the statement of financial position deals with assets and liabilities. Okay, so here we have to tell two false statements about income statement. It shows in detail how much profit or loss for the period has been made. This statement is not false, it's true. It shows the value of sales less total expenses as gross profit. No, it's false. Sales less total expenses is equals to net profit instead of gross profit. But if we want to calculate gross profit, then we have to deduct cost of sales from this sales amount. Okay, cost of sales. For example, sales less cost of sales is equal to gross profit, then yes, that would be true. But right now, according to this option, this statement is false. The next option is it represents the financial position at a point in time. this statement is also false because our income statement represents financial performance of the business instead of financial position. On other hand, if we talk about balance sheet, then yes, balance sheet represents the financial position of the business. Okay, so this statement is also false. It is one of the key accounting statements of any business, and yes, it's true. Our next question is question 12. Which of the following statement relating to the 5-year bank loan is shown in the statement of financial position is true? So as you can see, it's 5 years loan, so it will be categorized as non-current liability. But in our lecture, I have told you that we will split our non-current liability into two parts. The one will be current liability and the other part will be non-current liability. Okay, so it should be split into current and non-current liability. It is the one which we have to pay within 12 months, and the second one is the one which we have to pay later than 1 year. Next we have question number 13. Where should these items ultimately appear in financial statements? Items that appear in the financial records of the business include employees' salaries. These salaries are expense for the business, and we include expenses into income statement. We also call it statement of profit or loss. Cash held in the bank, it's asset for the company, and we record assets into balance sheet or into the statement of financial position. So the option D is the correct one. Item 1 should be recorded in the statement of profit or loss, and item 2 should be recorded in the statement of financial position. Then we have question 14. Which one of the following statements correctly describe the content of the statement of financial position? We know the content of statement of financial position. It includes assets and liabilities of the company. Okay, so a list of all assets owned by the company and all liabilities owed by a business. Finally, we have question number 15. Which of the following transaction is revenue expenditure? A. Expenditure resulting in improvement to property. This expense is enhancing our previous non-current asset, so it will be categorized as capital expenditure. Expenditure on heat and light, it is an operating expense, so it will be categorized as revenue expense. Purchase of a non-current asset and its installation, both are capital expenditures. So that's all for this video. See you in our next lecture. In case of any question, you may ask me. Thank you very much.